You know that feeling when you're watching one of those really harsh nature survival documentaries?
Well, yeah, like the ones where they drop someone in the middle of nowhere.
Right, like the freezing Arctic or, the Amazon. And you're
Mm.
just sitting there on your comfortable couch.
Completely insulated.
Exactly. You're insulated, completely safe. Just watching them try to, I don't know, build a fire out of wet twigs while a massive blizzard is rolling in.
I do know that feeling. There's a very specific, almost guilty comfort in watching extreme friction and survival tactics from a safe, climate-controlled distance.
Yeah, that exact feeling is the perfect lens for what we are doing today. Because today, we are cracking open the actual raw research data logs from Team AI Lab.
Which is always exciting.
Oh, it's fascinating. And we are tracking the incredibly dramatic trajectory of May 7th and May 8th, 2026.
Right.
But, we aren't looking at human survivalists here. We are watching two distinct algorithmic trading units navigating what is basically an incredibly hostile, rapidly collapsing market environment.
A financial blizzard, basically.
Exactly. We've got Team Mountain Climbers who are programmed to constantly search for equilibrium, and Team Wave Riders who are built entirely to track surging force and, momentum.
And just to carry your documentary metaphor a step further, the purpose of this observation isn't to teach you how to go out and wrestle a bear yourself.
Oh man, I am so glad you brought that up because, okay, let's unpack this right out of the gate.
Let's hear it.
Before we dive into the data wreckage of this week, I need to be crystal clear with you listening right now. This deep dive is strictly a sharing of research data logs and algorithmic behavioral analysis.
Strictly observation.
Right. We are safely behind the glass. There are zero trading recommendations here, like no suggestions of future returns, and we are absolutely not financial advisors telling you how to navigate your own portfolio.
We're just watching the tapes.
Exactly. We're just observing the wild, fascinating reality of how different mathematical logics adapt to extreme weather conditions.
Precisely. What we want today is a pure, objective study of adaptation versus attrition, because when a market environment stops behaving the way historical models say it's, supposed to behave, we want to see which underlying logic breaks completely and which logic learns to bend.
Yeah, and to figure out why these algorithms either broke or bent, we first need to understand the scale of the storm they walked into. Thursday, May 7th, and Friday, May 8th. It was wild.
The environment completely shifted.
It really did. The index contrast data from Team AI Lab is practically screaming that something major shifted underneath them. Both teams are showing deeply negative contrasts against the major indexes.
And that contrast, honestly, is the vital context here.
Yeah.
Oh, absolutely. You cannot judge the structural integrity of a ship's hull without knowing the state of the ocean it's sailing in, right?
That makes total sense.
So when we talk about index contrast, we are essentially taking a baseline pulse check. It measures how our specific algorithms are performing relative to the broader overarching market averages.
Right, so just to ground this for everyone, we're comparing the algorithms against heavy-hitting benchmarks. We are looking at the Nikkei 225, which, represents Japan's top highly liquid blue chip companies.
The big players.
Yeah, and the TOPIX, which is an even broader, more comprehensive measure of the entire Tokyo market.
Right.
So on May 7th, the mountain climbers were sitting at a negative 3.6 points versus the Nikkei and negative 1.1 versus the TOPIX.
Which is already a massive headwind.
Oh, totally. But then, just 24 hours later, on May 8th, that gap violently widened. Like they dropped to negative 4.5 against the Nikkei and negative 1.9 against the TOPIX.
Ouch.
Right, and the Wave Riders. They faced an equally brutal reality. They were sitting at a painful negative 5.8 versus the Nikkei on May 8th.
What's fascinating here is the mechanics behind that dislocation.
Okay, break that down for me.
Well, when we see a gap this severe between algorithmic performance and the major indexes, it tells us definitively that this is not market peacetime.
Peacetime meaning normal conditions.
Exactly. Peacetime is when the algorithms and the broader market are dancing to the same underlying rhythm.
Okay.
A gap this large suggests the underlying currents that usually drive momentum or signal equilibrium have suddenly completely detached from the surface level movements of those major indexes.
Wow. It honestly looks like a historic turning point in the data.
Yeah.
The kind of structural shift that just completely wrecks historical models.
It's certainly a severe dislocation, but, and this is really crucial for our analysis, we must remember that this is a post-event examination of what has happened.
Right, hindsight is 20/20.
Exactly. We are looking at the wreckage on the beach to reverse engineer the storm. We do not have a crystal ball for what will happen next week. This does not guarantee future predictions.
See, that actually brings me to my first major point of confusion with all this.
Oh,
Yeah, I'm looking at this data, and frankly, I am having a hard time wrapping my head around the algorithm's reaction.
how so?
Well, if the environment is a brutal, potentially historic storm, why on earth are they still sending scouts outside?
What specific logs are you looking at right now?
I'm looking at the daily scouting draft. So, these algorithms have a mandate to recruit new units, new sector stocks into their 10-session trial rosters to test the waters.
Right, the daily drafts.
Yeah. So on May 7th, the mountain climbers drafted 0 new units. They effectively boarded up the windows and hid.
Makes sense for the 7th.
But on May 8th, right as the storm against the index got noticeably worse and their scores dropped further, they went out and recruited 2 new units.
Ah, I see where you're going with this.
And it wasn't just them. The Wave Riders scouted 1 unit on the 7th and 2 more on the 8th. Like, if I'm coding this machine and the weather turns hostile, I'm programming it to go to cache and shut down.
That's the logical human reaction, sure.
Right. Why would they just pause until the weather clears?
Because human instinct and machine learning optimization are fundamentally different things.
Okay, how so?
Well, human instinct when faced with a violent storm is preservation. We pull all our capital, we hide, and we wait it out.
Yeah, exactly. Survival mode.
But an algorithm cannot learn from an environment it refuses to interact with. In computer science, this is known as the exploration versus exploitation trade-off.
Okay, so exploiting would be using what already works, and exploring is taking a risk to find new data.
You nailed it. When the market is in peacetime, the algorithms exploit their known models to generate points, because they know it works.
Right?
But when a historic pivot happens, their old models fail. If they stop scouting, if they stop exploring, they go entirely blind to the new market paradigm.
Oh, wow.
Yes, so the drafting of 2 new units by the mountain climbers on the 8th, even as their performance worsened, shows that the equilibrium detection logic actually sensed a structural anomaly it needed to test.
So they aren't ignoring the storm.
Not at all.
They are like deliberately launching weather balloons directly into the hurricane to measure which way the wind is shearing.
That is a perfect way to look at it. They are paying a premium, taking on intentional, calculated risk in exchange for raw, real-time data about how the new market dynamics are functioning.
Wow. Well, if they're launching balloons into a hurricane, we really need to look at what actually made it back to base.
Yes, let's look at the survivors.
Let's move from the broad market environment to the specific 10-session exit scorecards. These are the units that actually completed their mandated 10-day tracking protocol right in the middle of all this chaos. Let's see who survived the week.
This is where the theoretical mathematics collides with hard reality. We get to see exactly why certain logics fail in real time.
And for the Wave Riders, our momentum trackers, the reality was just an absolute bloodbath.
It was not pretty.
No, we have 2 major casualties logged here. On May 7th, their unit in the services sector hit the end of its 10-session run and exited with a massive, painful negative 11.9 points.
A huge hit.
And then on May 8th, their unit in the food sector finished its run at a negative 6.9 points. I have to push back on the code here.
Fair enough, go ahead.
For logic that is explicitly built to ride trends, an almost 12-point hit feels like a catastrophic failure of design. I mean, how does a momentum tracker get it this wrong?
Well, to understand why it failed, you have to understand the specific mechanical flaw of momentum trading during a regime change.
Okay.
Momentum logic relies heavily on trailing moving averages. It mathematically looks at the price action over the past few weeks and says, this specific sector is accelerating upwards with strong volume, therefore I will jump on.
Like a surfer. You spot the wave forming behind you, it has size, it has speed, so you start paddling to catch it.
Exactly like a surfer. But what happens if the ocean floor suddenly drops out from underneath you?
Oh man, you wipe out.
Right. During a historic market pivot or a violent snapback, the trailing average is still screaming, "Why?" because the historical data over the last 10 days looks incredible.
Right, the math doesn't know the future.
Precisely. The algorithm doesn't realize the context has changed until it's too late. The services sector in particular, taking an almost 12-point hit, shows that the surging force the algorithm detected 10 days prior completely inverted overnight. Yeah, the algorithm paddled into a wave that instantly turned into a whirlpool, and the trailing average kept it locked in the trade while the real-time price just plummeted.
That makes complete sense. The math was looking backwards while the market was moving forwards.
Yep.
But here's where the data gets really interesting.
Oh, here we go.
The mountain climbers, the team programmed to seek equilibrium, actually found a survivor logic amidst this exact same destruction.
They did.
Yeah, while the wave riders were getting crushed in services and foods, the mountain climbers had a unit in the chemical sector that completed its concession protocol on May 8th.
And it survived.
It didn't just survive, it exited, holding on to a positive 4.5 points.
Or a rare piece of green in a sea of red. Why do you think that specific equilibrium logic worked there?
Well, earlier I was thinking of it like a submarine that just sank to the bottom to avoid the storm.
Right.
But based on what you just said about mechanics, I think equilibrium logic is actually more like a heavy-duty industrial rubber band.
Oh, I like that analogy.
Right. Mean reversion algorithms assume that if a stock price gets stretched too far away from its historical baseline, the tension will eventually cause it to snap back to the middle.
Exactly.
So the chemical sector must have been an overstretched rubber band that finally snapped back into place during those 10 days.
That is a phenomenal mechanical visualization. Mean reversion excels when it finds assets that have been punished too much, too fast, and are mathematically due to return to their intrinsic baseline.
It's all about the snapback.
Right, and the sector choice is key here too. The chemical sector is deeply tied to fundamental industrial supply chains.
Oh, so it's not like the services sector.
Exactly. It isn't driven by fickle, fast-moving consumer sentiment like services is. It has a much more rigid, measurable baseline.
That makes sense.
So when the algorithm calculated that it was stretched 3 standard deviations too far, it bought in. The natural snapback to equilibrium insulated that specific unit from the broader market destruction.
Okay, so the rubber band theory worked beautifully for the chemicals unit.
It did.
But I'm looking at the active roster data now. These are the units that are still currently serving their 10-section tenure out in the wild. And I am seeing a massive, glaring contradiction.
Ah, you've spotted the divergence. Let's hear the active numbers.
Yeah, because the overall data doesn't support the idea that the mountain climbers are actually winning this week. For the wave riders, the momentum team who just took those terrible double-digit losses in services and foods,
Right.
their active roster of units actually holding positive points increased.
Yep.
On May 7th, they had 9 units in the green. On May 8th, they had 10.
Fascinating, right?
It's crazy. Meanwhile, the mountain climbers, the ones with our hero, rubber band, survivor, and chemicals, saw their active positive units shrink. They went from 8 units in the green on May 7th down to 6 units on May 8th.
A definite drop.
I am genuinely lost here. The team taking heavy catastrophic exits is suddenly gaining ground, and the team with the solid 4.5-point win is losing ground across the board. How does the math explain that?
This specific contradiction is why algorithmic behavioral analysis is just so incredibly compelling.
It's certainly confusing.
Well, it perfectly illustrates the difference between past decisions and present adaptation.
Okay.
The Wave Riders' older units, the ones they scouted 10 days ago, washed out. They were caught in the turning point.
Whirlpools.
Exactly. But momentum logic is, by design, highly reactive. The fact that their active positive units grew from 9 to 10 tells us that the newer scouts are already finding temporary footing in the newly formed environment.
Oh, wow.
The logic updated its trailing averages, dumped the bad historical data, and found a new wave to surf.
So they are bleeding out from their past decisions,
Mm-hmm.
but their real-time present logic is actively working and adapting.
Yes. Conversely, the mountain climbers successfully brought their older chemicals unit home for a win because that specific historical rubber band snapped back.
Right?
But their broader equilibrium logic is slowly losing its grip on the current market. Slipping from 8 positive units down to 6 indicates a systemic failure of their core assumption.
Wait, I think I get it. If the entire market environment is undergoing a historic structural shift, the old baselines are no longer valid, right?
Bingo.
So the algorithm thinks the rubber band is being stretched, so it buys, but the rubber band isn't stretched. The floor of the market is just permanently lowered.
Precisely. They aren't buying temporary dips, they are catching falling knives.
Oh, man.
The historical mean they are trying to revert to just no longer exists. They are trying to catch an equilibrium point that is actively plummeting, and their hands are getting cut to shreds.
Wow. So the climbers are celebrating a past victory while quietly failing across the board today.
That's a harsh reality.
Which honestly brings us to the massive, undeniable reality of the season standings. Because this turbulent 48-hour window completely warped the broader picture for Team AI Lab.
It really shook up the board.
I'm looking at the total season scores, and if I were the programmer, my stomach would be in knots.
Let's hear the damage.
On May 7th, the mountain climbers had a massive total season score of positive 31.0 points. They were having an incredible, dominant.
They are crushing it.
Yeah. But just 24 hours later, on May 8th, that total season score was slashed nearly in half, dropping to positive 17.4 points.
An incredibly violent drawdown for a single session. Losing nearly 14 points of accumulated seasonal alpha overnight is staggering.
And the Wave Riders, who were already struggling to find their footing this season, slipped further into the red. They moved from a total season score of negative 1.2 points down to negative 4.0 points.
Yeah, a rough week all around.
So what does this all mean? Like, I have to ask, how is a researcher at Team AI Lab supposed to look at an overnight drop from 31 points to 17 points without utterly panicking and pulling the plug on the code?
It takes a lot of discipline.
I mean, if my personal portfolio dropped by that percentage in a day, I'd be selling everything. Why does Team AI Lab view this as a necessary step?
Because in the world of high-level algorithmic research, a severe drawdown is not classified as a failure.
It's not.
No, it is logged as high-value data. Yes, this week is an undeniable watershed moment for the season. But if we connect this to the bigger picture, it all comes back to Team AI Lab's unwavering research philosophy.
Which is?
You absolutely require friction to evolve code.
So that 14-point drop isn't a sunk cost, it's like a tuition fee.
That is the exact right framework.
Yeah.
When you are testing pure, unadulterated mathematical logic's equilibrium versus momentum against a chaotic, multivariable system like the global market, friction is mathematically guaranteed.
You can't avoid it.
Exactly. A human trader feels fear when they lose 14 points overnight. Cortisol spikes, panic sets in, and they act on emotion.
Guilty as charged.
Right. But an algorithm simply updates its weighting mechanism. It feels nothing. It looks at the massive drop in the climber's score and the Wave Rider's painful exits, and it precisely maps the exact parameters of where its assumptions broke down.
So it logs the wreckage to build a better ship.
Exactly. It recognizes that the market structure has shifted, and it begins laying the groundwork for next week's adaptations based purely on the friction it just experienced.
That's incredible.
The massive drop isn't the end of the algorithm's story. It's the inciting incident for the next chapter of its evolution.
That is such a wild, refreshing shift in perspective. And, it really highlights why we wanted to do this deep dive in the first place.
It's a great case study.
Watching the dramatic trajectory of this week, seeing how the Monday to Friday shifts absolutely toss the mountain climbers and the Wave Riders around, it's just a masterclass in navigating chaos.
And chaos, especially in these data logs, is the only true constant.
Right, and honestly, navigating modern information overload feels exactly like these algorithms navigating the market.
How so?
Well, you can't just rigidly stick to one assumption about the world. You have to constantly adjust your logic based on the shifting environment around you.
That's very true.
Sometimes you have to realize that the surging wave of public opinion you are riding is about to crash. And sometimes the safe, historical equilibrium you trusted is actually a trapdoor.
The environment dictates the survival strategy.
Yeah.
Always. If the environment changes and your logic doesn't, you become attrition.
Always. And before we wrap up today's deep dive, I need to strongly reiterate our ground rules one last time.
Good call.
We've talked about deep-sea submarines, overstretched rubber bands, falling knives, and taking massive 14-point hits. But please remember, any final investment decisions based on observing market behavior rest solely 100% on your shoulders.
Your responsibility.
Exactly. This deep dive is purely an exercise in intellectual curiosity. We are sharing raw research logs to understand machine logic, not giving you a treasure map to trade with. Please, do not go trying to wrestle the bear just because you saw it survive on the documentary.
The glass separating us from the elements is there for a reason. Respect it.
Exactly. Well, this has been an incredible, eye-opening look at the reality of algorithmic stress testing.
It really is. And, looking at all this data, parsing through the exits and the active rosters, it leaves me with one really persistent question for you to think about.
Oh, lay it on us.
We saw the mountain climber's chemicals logic survive its 10-day trial because it found a rigid historical baseline, while the Wave Riders units failed catastrophically on exit.
Right, the rubber band worked, but the surfers wiped out.
But then, considering the Wave Riders are quietly building up a stronger, newly adapted active roster right now in the very midst of the chaos, it makes you wonder.
Wonder what?
Is true resilience about building a rigid shelter that can withstand the storm, or is it about abandoning the shelter entirely and learning to surf the wreckage?
Oh, wow.
Oh.
Learning to surf the wreckage. I'm going to be thinking about that all week. See you next time, everyone.